Positives for Microsoft.
Whoa. Hello everyone. How are we doing? Hope you guys are all doing well. Hola, Kling. How we doing, man? Or she, he or she, whoever you are. Hope you're doing well. Guys, it is so snowy out. What? Crazy, man. We'll give it a watch for we'll wait until some more people join up, but we will get the classic split camera here. No. Where's the video camera on this? You're joking. Why can't I do it here? Bruh. Okay, well, I guess you guys just get no face cam during this scene right here. I mean, not that you want to see my face every time we look at a chart, but yo, what is up? Hope you guys are doing well. Okay, so we got some things to talk about, but first I want to fix this face cam glitch. This is annoying. It will not let me remove. Yes. Video capture device. Add existing. Boom. There we go. Look at that. Fixed it. Rader, make your face smaller on screen. Rader. Okay, buddy. Okay, pal. Actually, you guys want to see the entire screen. You don't mind black borders, do you? Do you guys mind black borders? Probably not. I don't think you guys care for it. Okay, cool. So we should be rocking and rolling. Daddy most probably is a man. Oh. Alright. Hope you're doing well. So cool stuff. Can't wait to show you guys some stuff. So first of all, we have to turn this trash music off. We have to put something more good on? More good? Alright, that's good enough for me. Yes, the music is barf. Hello from Texas. What's up, man? Hope you guys are doing well. So we have some stuff to discuss tonight. Really important stuff. This is only going to be about an hour stream, but there's some super important commentary and a lesson. Last night, I tried doing a lesson and my internet got nuked as I started to do the lesson. So tonight we're going to do a different lesson, but we will make it a good one. And hopefully you guys, of course you'll vote on it, but hopefully you guys will learn a thing or two from that. Of course, we do have to talk about a bunch of stuff. Most notably, the current state of the market, where it's at, where I think it can go, the trades that I am going to be taking along with it, as well as the major themes that you guys need to carry into these next 2 weeks ahead of Trump's inauguration. Now, there's a lot of misconceptions about the inauguration, about the trade, all this other stuff. We're going to talk about that. but most importantly, kind of what are the opportunities. I always like to tell people that we are in an industry right now that not a lot of people want to stick their neck out and say, this is how I think it's going to be. And that's whether it's a lack of knowledge or ignorance, or it's just purely deceptive behavior and malicious intent to just peddle courses. I don't know. But I would like to say that, you know, if you watch our streams or my content, stuff like that, that it's a little bit different. So I've had a very lucky upbringing, to say the least, from my knowledge in my trading so far in my life. Having professional mentors at an age I did, even still today, being around world-class traders and to be mentored by some of the best people in the world is awesome. So I've been pretty lucky in life, and I'm glad, and hopefully through some of this content and stuff, I can give a little bit back of what I think I got lucky with. So but yeah, with that out of the way, we can actually market crash pending. I can't believe I titled that stream this. But yeah, so that's what we can do. So as far as the markets right now, we first have to talk about the report. Now, shameless plug, since a lot of the people watching after the fact are going to see this first, I thought I'd put it here. But you guys know I am the founder and owner of the Rader Report. You know, that sounds like old business in, you know, corporate and blah, blah, blah. Listen, this platform is just where I post my professional research, my perspective on the markets, my professional trade ideas, the expectations of the market, things like that, all backed by data. I don't post a single statement that is, let's just say, unprofessional. Everything I do is to the utmost bar, and that's just who I am and how I do it. So as far as the Rader Report this week, we really have to talk about a few concepts, because we did highlight some of the major things that were changing in the markets, most notably the market dynamics, and that the market dynamics are starting to change in the markets. And we're going to highlight a few different key data points to reflect that. But into this new year, there are going to be some huge changes to how these markets work. And the traders that don't adapt to these changes, they will fall off. They will fail. And, you know, especially moving forward, this market is going to punish those who oversize, who revenge trade, who really are just stuck in the water trading the same things. And so you really have to know that opportunity shifts. And as a trader, where can I shift my focus to stay with that opportunity? That's what we're going to discuss tonight, and things like that. I'm watching this on the highway right now. Okay. You better not be driving. But that's that. So that's I'm watching this from the bathtub right now. Okay, can we stop this trend before it starts? Stop telling me where you're watching the stream. Okay, just watch it. I don't care if you're on the toilet, the bathtub. It's even weirder that you're in the bathtub. Okay, now I have to think about a naked grown man in the bathtub watching my stream. Let's move on. So what we want to talk about next is really the market dynamics. So one key concept that I talked about on the Rader Reports is that the market dynamics are changing, and there really are two groups that control the markets. And there's, I guess how I want to phrase this is the market makers and the general market. Okay, we're going to call the general market just everything but the market maker. Okay, so in times of heightened fear, volatility, heightened options activity, who is in control of the market? You have to ask yourself this. This is a really deep question. Who is in control of the market? Well, wait a minute, right? Is it the funds putting money into the market? Is it retail? Is it the mutual funds repositioning things? Who is in control of the market? Well, during certain times, the market maker is in control of the market. And what are these certain times? Like I said, are the heightened, volatility, where there's increased options activity. And why would a market maker be in control during those times? Especially with heightened options activity, when a lot of people are hedging per se. This is where a market maker is really going to get control of the market. Why? Because with all of these puts he's selling, right? With all the call walls and the put walls, with all the puts he's selling, when you have something like a market drop, right? If there's a lot of puts in the market, which I will show you throughout this kind of stream, then when it drops, market makers are going to be short to hedge those. But then since they're selling these puts to the market, to the participants, they have to hedge by selling equity. So they're short with the put. And so when the volatility starts to decrease, when you start to go down, they're going to be forced to start to buy shares on any pop. And so what actually happens is you actually get a mechanical reversal, right? A mechanical reversal. And that's a key term that I say because it's not that sentiment change where people became more bullish in the market. It's a physical process of the market. It's a mechanic. It's that you turn the key and the engine turns on, right? It's just how that works. It's the process. And so what's really changing in the markets right now, right? That's when the market makers are in control. Is in times of, when there's heightened volatility, when there's a lot of fear, when everyone's kind of on the same page doing the same thing, especially with options. That's when a market maker is in control. But there's other times where the market maker really isn't in control. These are in times of decreased options activity. These are in times of, very low IV markets where, like I said, that options aren't really a thing. And so what you actually get here is in times when the market maker is not when the market maker is in control, the better stuff to trade is imbalances, is IV, just ideas around this general bubble of imbalances, put to call ratios, put to call walls, options positioning, option flow, IV and leverage, things like that. So really when the market maker is in control, you really want to focus on things around options. Ideas around options. How can I time the market around this options positioning, this options chain? And so for many of you, this is going to be confusing. Maybe you haven't heard of this before, but the way I trade is mainly based off of, at least a core component of it, is the options market, and that it helps you time moves incredibly well. Why? Because options affect the underlying, and they also have an expiration date. So we not only have a direction based off of that option imbalance, like, hey, say this is bullish. If there's a put imbalance, that is a bullish idea off of it, right? So we have a direction, but we also have a timing. By when do we know a market maker will have to act upon this level to balance it, aka sell shares and then buy them back as volatility is crushed. The puts lose premium. They need less hedges. They hedge by selling equity. To exit those hedges, they are going to now buy shares back. Okay, now hopefully I'm not losing you. But what I'm trying to get at here is that when markets are like that, when the market makers are in control, those are the more profitable trading strategies. However, there's the other side of the token. When market makers aren't in control, what is the more profitable way to trade? Well, it's more so of what I call the barbaric way of trading, the more simple newbie way of trading. It's just the simple ideas, right? No need to look at options chains, no need to look at all this stuff. Really just focus on what were the outperformers of 2024. Good, keep longing those. What were the underperformers? Good, keep shorting those. Just go based off of the idea that you're going to just trade strength and you're going to short weakness. That's simple, really. Fundamentals, news-based momentum, those kind of things. Very simple ideas. You don't have to go past the crust, right? You just stay at the surface level, and that's enough so long as you're careful and smart about which names you pick. So, for example, today, one of the outperformers was, of course, as you saw, airlines, UAL. Some other outperformers were recent IPOs near their 52-week highs. The names that were strong in 2024, those were the ones that got the biggest boost. So these changing market dynamics is what we're going to talk about today. Highlight some different things as well as some trade ideas. So hopefully that made sense. Okay, let's see what you guys are saying. Is it possible that it is what caused the pop in Tesla on Friday? S&P said there was a rumor market makers were offsides. SMB. I mean, I would say no. So Tesla is really, I would say back here, yes. I would say back in November, absolutely. But, I'm not sharing my screen. I would say back in November, absolutely, yes. So this would be a time when this was really the big trade, that market makers were not prepared for such a big move. You start to go higher like this, and you just cause that kind of squeeze where the market makers are just buying with the trend now. Everyone piles into calls. You get market makers starting to pile into shares, buy shares as it keeps gapping up. So as far as Friday exclusively, I don't think so. I mean, you did have the overall markets pop on Friday. I mean, you had the overall market up 1.25. And off a low, this is not unusual. If you look at NVIDIA as well, So Nvidia did a big scream as well, right? That doesn't mean the market makers were offsides or they weren't doing their job. It's just that these were the leaders. Like we said, that the market dynamics are changing, right? And that the ones you want to look at too long are really going to be those year-to-date performers, those outperformers, things like semiconductors, things like quantum computing, even recent IPOs, just airlines, things like that. So I would attest it more to that idea, because if you blame it on just the market makers, that's not an actionable idea for the future. So let's say, you say, okay, well that rumor is why it popped, but that's not a repeatable idea, if that makes sense. So you're not going to be able to go in the future and say, oh, well, this is clearly where they're offsides. You don't know how they were offsides, what they were offsides with. It's just, especially from it being a rumor, you don't know, right? So I would say no to that. I would say that pop was pretty normal for Tesla, 7.25%. But certainly a lot of names got bigger moves on Friday just from that overall market pop. Again, I would attest it more to it was kind of along that idea as well. But keep in mind as well, this was a day when you had the VIX really drop. So when you gap down on the VIX and you have this day right here, this really crushes premium and it forces a big move for the market. So you typically get that consolidation, you get that big red candle down, that causes a big move in the markets, and oftentimes that's when you get those big days. Market crash. So we'll talk about it. Not exactly a crash, but you will definitely see. The whole theme of today is market dynamics change. But with that being said, what we're going to talk about is next. What I'm going to show you guys is the different. I'm going to show you guys some data. So we will take this. Let me get you guys some of this data. We're gonna walk through this together. Okay. So keep in mind what we've been talking about is that the markets are changing dynamics, and that as you come into this new year, we need to be aware of that. And a classic story I gave was this right here. So what I put in my report was, he said clickbait title, right? What I put in my report was this story about Blair Hall. If you guys don't know who Blair Hall is, he was a trader back in the early 90s, 80s, things like that. That he really made his buck off of market making, that he had an edge, he had quantitative models, and he made a lot of money from market making. So of course, market making is high volume, low margin. And so what you do is you basically you basically make your money based off of spreads. So you're providing liquidity to a market. You have this edge in the markets where you know where and when to provide liquidity so that you capture a spread between the bid and the ask, and you profit it, and you are rewarded for providing liquidity. That's how market makers, kind of roll. And because they provide liquidity, they can't have big margins. Oftentimes, you cannot possibly gain large margins, at least percent return, because of just how the nature works, right? If a market maker were to aim for 1,000% trades, it doesn't work like that, because their job is to provide liquidity, not be a speculator. So what Blair Hall did in the early 90s, 80s was he made this quantitative model, and he did very well. And Goldman Sachs came along and they said, you know what? We like this guy. We're going to buy him for $500 million. So Goldman Sachs comes along and buys his firm for $500 million. Now, this was a transitionary time into the 90s, early 2000s, was when Wall Street was going electronic, when Wall Street was going to go online. And so this quantitative model was on the computer, but it quickly became outdated. As other people got models and things like that, Blair Hall was kind of left in the dust. It no longer really worked his edge. And so within, I don't even know if it was 2 years, this Goldman Sachs firm that they purchased, Hall Trading Group, dissolved, like almost completely. Unprofitable. Even Blair Hall after made another firm, failed to make any true profits with his own firm, closed down shop as well. So all of this stuff kind of just went out, dissolved. Now you ask yourself, how does something like that happen, right? How does someone go from making $500 million from this deal, attracting the eyes of one of the biggest investment banks in the world, to all of a sudden not be able to figure shit out, right? They weren't able to figure out any more edge. It's because they lacked to adapt. Now, was this something they could have done? Was it impossible to adapt? Who knows? But what I would say is that this is a lesson, and a very painful one at that, a reminder that if you don't adapt, you will fail. You absolutely will fail as a trader. And that it's actually rare to see many traders go very long in the markets with their perspective that they learned. You very rarely see traders that stick around for 30 years, 20 years even. Because what happens is they make their big personality, their big boom on just a few conditions in the market. And after that, they really fail to adjust and they fail to adapt because they get wrapped up in those big trades that they made and feel like that's the only way to move forward. But the sad reminder is you have to adapt to survive. So how does this relate to the overall markets and things like that? Well, right now, the market dynamics are changing. And if you don't adapt, you will fail. And you need to recognize when and where these dynamics can change in the future, because that will directly adjust how you position in the markets, how you look to develop positions in the market, such as strategies you trade, options, put walls, things like that, based off of whether the market makers are in control or whether they're not. That is a huge component to the market. Is everyone okay, hold on. Don't you provide liquidity when gamma is positive and liquidity is removed when gamma is negative? How do you adjust your trading strategy to adjust the market dynamics change? So Neil, we'll talk about that in a second. I'm actually getting to that right now. But one of the best ways to adapt to that is simply, you have to know, and this is, I don't want to be negative or anything, but sadly, a lot of people are just ignorant to different ways of capturing edge in the market. Not a lot of people are informed about the options market and how it actually influences the underlying. And in a way, it is the underlying, and that it is the most powerful asset class in the world to read the movements of both options and equity market. It's very challenging. But what I will say is we are going to talk about that. So just hold on for a second. 117 monthly expiration thoughts on S&P. I need another trade TV. Trust me, bro. Prediction. We'll talk about that as well. Neil, knowing if gamma is positive or negative coming into the trading day every day is important to determine direction. Every instrument's gamma will be different. Last week, Friday, I had positive gamma and ES had negative gamma. I use this as a trade to get long Q and ES. One thing to remember as well, though, is that positive and negative gamma don't necessarily mean that there's necessarily going to be a move. Number one, you need to consider that if it's a daily gamma, if it's 0 DTE gamma, that's going to have less effect than something like a monthly gamma for a monthly expiration. Because ultimately, the market makers are going to be moving the markets in preparation for the bigger expirations. So the monthly, the quad witching, of course, being December, etc. So you really have to think about that. But gamma, positive gamma, what you have is typically a stickier environment where it becomes trapped. But too positive gamma, of course, you expect negative kind of correlation, because as the markets go up and you have positive gamma, market makers are going to start selling shares. And so naturally you get a suppressed move. Versus negative gamma, market makers are shorting shares. And that means on any pop, when the markets start to go up, their delta decreases, which means they buy back shares. So it's typically bullish when you have negative gamma, because market makers are shorting shares and to hedge the puts, of course. But that's kind of that. But that's that. What's up, BRT? Hope you're doing well, man. So as far as everything else, how do we adapt to the markets? What is going on in the markets right now? What is an example of, this change? How do we know the market dynamics are changing? Well, it's very simple. One chart you can look at is just this, right? So these are two different charts. So above this right here is going to be January's expiration, okay? And what I've done is I've pulled the expiration, right? I've pulled the expiration of October. So this was previously October, okay? Now, last year, if you guys were staying up with the options market, and of course, I encourage you guys, if you do trade, always track your data, always store your data, things like that. But this right here, this shows the open interest in the markets. It shows the puts and the calls, orange being puts, blue or green being calls, if you're colorblind. What are some observations you guys notice? So first of all, let me ask you guys, guessing is free and participating is free. So go ahead and drop some observations you have regarding the differences between these two charts. Let's see what you got. NVIDIA CEO or Rader? Choice is clear. I hope you got a chance to see my email. Harry, what is your email? I looked after stream and I couldn't see it. Did you email me? Because I don't even see an email from you. Hope you're doing well, man. I looked after stream and I didn't see it. Did you email the right Rader? Hopefully you didn't get scammed. Please don't be scammed. Way less volume this year. We'll send you again now. So it's RaderTrader101@gmail.com, just to be clear. Sorry if I didn't see it. I don't know. It might be my spam, trash. I don't know. Observation. The guy is in the top left is pretty handsome. All right. So let's so when my moderators are acting out of pocket, how can I ban them? I can't ban my mods. Wait, I can't say that in 2025, my bad. 100K fine. Okay, so right off the bat, you guys did make some good observations. And again, it is absolutely free to participate. If you guys are watching on the couch, whatever, it is free to participate. What you actually notice between the two, just right off the bat, is number one, the put walls are dramatically smaller. And not only that, but check this out. So the closest one, the closest biggest wall is not even 100K. I don't even know if this is 80K. It's barely 80K. Okay, this one is super far out of the money. It is not within expectations, and it's not even 100K. So you have not only a huge decrease in puts, but you also have the bigger walls being way less out of the money, right? So this is 595. 40 strikes is the biggest one. Right here you have 580, and then you come down to 550. This is 29 strikes, and you have a wall over 100K. So not only are the puts in October closer to the money, but you also have bigger walls, right? And you have way less calls. Look at this. No one was buying calls in October. No one. Absolutely no one. Extremely tiny call walls on SPY. Okay? Compare that to this. Look, now you have a lot bigger walls for the call side. You also have a lot of these closer to the money, right? You had a lot of these further ones out of the money, very small ones at the money. No one was buying calls here. Again, this was one of the key factors to what drove that October bottom, right? Mechanically speaking, right? We had a seasonal bottom in October. We expected that. Of course, markets typically bottom around October. But you also had this right here, that the huge mega put walls were close to the money. That you had these within kind of that expected range. So this is super powerful because what changed here is bulls are starting to hedge less. They're not hedging as much. And this is exactly why you have seen the price action that we have on SPY today. If you look at SPY, as soon as we hit January, boom, right? You have a lot more selling pressure. Now, this hasn't been a market crash. Yes, my title is absolutely and completely clickbait. But what it's doing is it's changing its market dynamic. It's allowing selling pressure to come more predominantly back into the markets. So moving forward, selling pressure will continue to be lingering within the markets, right? Throughout 2024, the short trade really wasn't there. There wasn't many shorting opportunities throughout the year. But this year, there certainly will be. Now, we're going to talk about the timeline of that, but also some other ways that the market dynamics are changing, specifically how we can actually trade off of this dynamic change. Okay. Does anyone have any questions? Rage bait title. What's up, Seth? How are you, man? Does anyone have any questions? If you have any questions, drop them down below. All right, let me check. Oh, okay, cool. So what I would say to this, Mr. Harry, is that so the discount you're referring to was the Black Friday deal only. There is a 14-day free trial for the Rader Report, but again, there's no discounts for it, so it would be $50 a month. Do we get stop hunted? EG, you're not on the wrong path. We'll talk about that in a second. So buy every VWAP test. No. What's your view on NQ for the week? We're going to talk about that. Okay, so I don't think you guys have many questions other than that. So that's good. But as far as what you can actually trade moving forward in the markets, well, we have to first reload the chart again. So what's been going on with the markets is kind of a rage bait market, exactly like you expect with Rader's video titles. So what's going on right now with the markets is very predictable. And let me kind of show you why. So this right here is the seasonal chart for, again, this is all in the Rader Report. You better go sign up right now. This is the seasonal, I make all this data, by the way. This is the seasonal expectations for the month moving forward. Okay, so this is January and how we historically perform. Now, seasonals around these times are pretty ass. It's just that simple. From the 5th to the 10th, you can see that literally nothing happens. Typically, you get some sort of move down, but the dip gets somewhat bought. You see some strength into the close of the 10th. But overall, it's really a nothing burger. Now, you do have tech seemingly outperform here. I wouldn't attest that to anything super crazy. But again, technology outperforming, it could be a theme here. So overall, really a nothing burger in seasonals. When is there really a bigger event? Well, past the 10th, you typically get a decline with some sort of bounce into the 15th, 20th. You get another sell-off into the, of course, monthly expiration. So if we expect a sell-off into the monthly expiration and also some selling pressure after the 10th, what is the trade until then? Well, like we said, with these markets changing, if the market makers aren't in control, we have to know what to long. And right now, with this nothing burger seasonal, we have to be very careful. And we can see why we have to be careful when we look at things like C or even KRE. These names that popped, some of these trades I took this week. If I did not take profit at where I was supposed to, this would have just completely reversed on me. Even names like QUBT, instantly today, as soon as it hit, boom, right? Instantly reversed. So you're getting this kind of pump and dump scheme, right? You're getting even energy. Look at energy, boom, right? Gap up in the morning, open up, huge sell off into the rest of the day. So you're getting this nothing burger seasonal that you're getting a lot of trapped ranges. You're getting a lot of reversals off the high because, again, the dips are going to be less supported, guys, because more people are buying calls, making it harder to go up, while less people are buying puts, making it easier to drop. Okay? So you're kind of in this situation where it's boom, 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 right? So you get a big push up, boom, you drop. Now we are at an all-time high, so of course market dynamics will change. You're not expecting, a market crash like everyone has been talking about, but we can start to anticipate more selling pressure into the 20th. Okay. Is Zach still part of your Discord? Yeah. The whole idea of the Discord is that was kind of where we hang out, and just where we have more professional discussions like we are now. Do we have videos about unusual activities on options? Yeah, I have a few of them. ICT basically explains this in his 2022 mentorship. All right, you lost me there. Find a 100-year chart on Dow Jones, and that's your reason to stay long forever. Right. Stocks only go up. But with that being said, what we have to look at now is what are the major themes, right? So just to recap, if market makers aren't in control, if we expect a nothing burger seasonal, how do we make money moving forward? Well, it's very clear, and the market was showing symptoms of that today. You want to continue to be on the more simple side of the market, right? When you see strength in leading stocks, you long it. For example, today, UAL. Airlines were one of the top performers of 2024, right? It's no surprise. I mean, from top to bottom, this thing absolutely mooned. So I think they're up well over 100%. Let's see here. How much is UAL up? So let's just call it from here. Boom. Yeah, you're up around 200%. So airlines are up nearly 200% this year. These are continuing to be strong. Even looking today, you saw this was an outperformer in the morning. So you want to look at 2024 leaders, okay? Avoid mega caps. Stay within the leaders here, okay? I would say your only exception is semiconductors. But when you look at other stocks like recent IPOs, you look at Chewy. This one popped a lot today. So Chewy, recent IPOs, things like that. Even Kava, if you look at Kava popped today. What else? You could look at RDTT, Reddit as well. Reddit has been doing extremely well. So recent IPOs, 52-week highs, 2024 leaders, things like that. These are going to be the names you want to continue to long, right? There's not going to be a dip buy opportunity necessarily, right? It's not going to be necessarily buy the dip, but it's going to be continue to trade the breakout, right? Don't be a wussy and sit there and go, oh, I want it to pull back $20. Because believe me, when it pulls back $20, you won't buy it. You'll say, oh, this looks weak. I want it to go back another $10. You'll keep sitting there and waiting for it to enter, right? So these are type of names that you want to just keep playing the strength. You see a gap up in the morning, markets, gapping up off a low. You want to play the continuation, okay? So I found success in this today playing Citadel. So this was one of my bigger trades this morning. Citadel gapped over 1 and 2 targets here. Boom, longed in the morning and caught a nice trade to the high, 74. Definitely missed out on the after hours move. I did not swing this from the day prior, but this was still an exceptional trade and one that I'm happy with. So Citadel, of course, banks being a big leader of 2024 as well, is another name to consider along that theme. Okay. How do you trade unusual activity options? So it's not necessarily all about trying to find trades that you think people know more about. Unusual is kind of it's a term to sell things more. I mean, there's nothing unusual about a lot of the orders. It's just they're different or something like that. So what I would say to Flow is that I have a lot of content on Flow. If you actually want to learn how we trade Flow and things like that, it's not about knowing who knows more, because not a lot of people know anything in the markets, but it's more so about what is the reaction off of this order. Can that order be proven correct? Is the market maker moving it against that order, et cetera, et cetera. So it's more side of the mechanical side rather than guessing if he knows more or not. So definitely hey man, join the Discord, watch the Rader, sign up for the Rader Report. I talk a lot about flow trades on there, and I can kind of show you guys some tonight. So that's that. So with that being said, right, we want to stay long these longer names. When is that idea expected to continue? Now, at the latest, I think into February is when you're going to see these ideas really pick up, even a dip buy opportunity in March. Remember that if we just go pull up the seasonal tool real quick, that typically into February is when things get really spicy. So right here, you can see throughout January, you do get quite a big chop in the markets. Again, a nothing burger seasonal. You get the pump and dump scheme underway. Now, moving forward, you do expect some strength into the 10th actually. But after, again, weakness into the 20th, you expect to sell off into that monthly expiration as well. Okay. So upside this week, like we've been seeing, but also selling pressure into the 20th. So I think at least until this Friday, you can remain long within these names, within these 2024 leaders. As the new year starts, naturally speaking, money managers are going to be looking at repositioning from quad witching, which was on December 20th. $6 trillion expired. They need to move that money somewhere. They're going to start putting it into the big winners of 2024. I think airlines is definitely going to be an attractive one for a lot of money managers, hence why you've seen a lot of buying pressure today. But also just, again, the leaders, recent IPOs, 52-week highs, these names are going to start to get a boost. Now, there's another opportunity where I think this could play out, this theme again, into early February before that kind of really bearish blow off top tends to happen. Okay, so typically around late February, mid-February, you typically get some serious selling pressure in the markets. And that is where the market makers really do start to gain control once more, and where you can really start to play flow, imbalances, put-call ratio, et cetera, et cetera, et cetera. Okay, into that, of course, mid-February period, drop into March. This is where you really want to focus on that market maker gaining control, playing the options market, reading the chains, etc. Okay, this is not where you want to be playing the more fundamental trade ideas such as longing the leaders of 2024, etc. All right. Now, is there going to be a dip by opportunity in these leaders into April? Sure, I think so. But that's that. Okay. Man, these Rader reports are fire. I appreciate it, man. Are you a subscriber? You better be. But yeah, if you are, hope you've been enjoying it, man. Tough markets, especially to report on. I will say that just because, again, it's pretty boring this time of year for a lot of trading. But with that being said, yeah, so that's really what you want to focus on. A few big winners of mine recently as well. OKLO, this was a name that I also took, along with Lunar. These were both in the Rader reports from 2 weeks ago, I think. But super, super cool trades in these in the sense that it's the same thing. We're just playing the leaders, the names that really popped off in 2024. And you can see Lunar was one that really rocketed in 2024. It was a strong name, relatively strong compared to the overall markets. It had a nice setup. You just long this theme into the first of the year. Of course, small caps as well, getting a big boost into late December. That's why one of the major reasons. Okay. Nope, yeah, not yet. Cool, man. No worries. But yeah, so again, these tools and stuff I will build on the Rader report. You guys have access to those. But that's pretty much that. So if we go and we look at the weekly report, so a lot of the trades that I placed on this week were specifically tailored kind of around. One of them was QUBT. So we caught the pop this morning. I think the contracts went from about $1 to $3, about 200% trade here in the morning. I've even holding some for January 17th still as well. But this right here is along that same theme. That QUBT is this quantum computing theme that heading into this January period, once again, play the simple ideas. The stocks with momentum, the stock near their highs, their 52-week highs, recent IPOs, these names are going to continue to get the strength. Not the necessarily penny stocks that are at the low, all-time lows. Don't expect a short squeeze in those. Expect the rotations to be within the leaders from 2024 and past quad witching December 20th to now. Okay. So QUBT was one as well. This one I just kind of showed you. It was that kind of pump and dump one. I'm still holding this for January 17th. But this right here was a nice trade. So other than that, this was Citigroup and KRE. So again, banks playing the banks, things like that. Very simple trade ideas here. These worked out quite well as well. So, yeah. So that's pretty much how you want to adjust your positioning. Now, to the short side, I know you guys are going to be asking, what can we gain exposure to? Well, it's very simple. You want to long the laggers. Now, you don't want to long the super laggers. You don't want to go look at a chart like CVS and go, I want to short this. Bad idea. This is already down so much. You do not want to short necessarily this. But, if you look at stocks like XBI, now wait a minute, right? This has been selling off pretty hard. It hasn't really done anything this year. I mean, if you go look at the start of this year back in January, we really are almost at the start of where we were. So relatively speaking, this is a weaker name actually, and that this could be one of the names that we continue short because it really didn't go anywhere in 2024. Okay. So XBI, I have a short position in Guild. So GILD, short trade, excuse me. I have not taken a position in this yet, but GILD, I'm expecting some bearish selling pressure on. I might get an entry tomorrow, but this is going to be a January 10th or January 17th expiration short. Okay, so GILD. Now, what is the trade idea behind this? You talk about option flow. Here's some option flow. So this trade right here came in very aggressive. Again, it's not who trades it. It's not why they're trading it. It's not do they know anything. We're not trading on insider information. It's not that this person knows anything. It's that, was this order placed as a hedge? Was it placed as a discount? What was the criteria? We have three main categories. If you guys are familiar with how we trade, you're in the group, whatever. But XBI right here, 110 expiration. It's aggressive. It's not a monthly expiration, which means it's good, right? Typically when you have a monthly expiration like 117 flow, it's washed out. It doesn't mean anything because it's likely a rebalancing trade or something. That just doesn't matter. It just does not matter. There's a few other criteria we won't get into, but this right here is a short bet on XBI. Okay. So this is trying to play a short trade in XBI, quite aggressive, 1,000 contracts. This is a very, let's just say, intentional placement of this trade. So I actually think he was going to be correct. Now, what we want to do is wait for a discount first. So because he got the 10th, theta decay will likely work on this guy, and you're likely to see some sort of move against him. Now, he got this at 91.19. He is currently out of the money. Excuse me, he got the 92 strike, but he got this at 91.19. So they have forced it a little bit against him, and you can see instantly you saw a reaction against him. As soon as he placed this order at 91.19, as soon as he placed this order, you saw a move against him. Boom. This is often a good sign that the market maker is balancing against this order. Now, I just said that the market makers are not in control. However, since this is a lagger of 2024, this is why, more primarily, why I'm actually interested in this trade. But this is just to help with the timing, this XBI order. So instead of trading XBI, what I actually wanted to go do was play a sympathy trade on GILD, because this is actually way weaker. So you can see right here, a lot weaker than XBI overall. So you've failed to rally really anything in the last week or so since the 30th. So that's it. Abstract donated 5 whole clams. Let's go read what he said here. So when does the OnlyFans drop?
Oh, hell no, man. What the fuck? Oh, hell no, man. Oh, hell no, man. What the fuck?
All right.
Did you pray today?
All right.
Tomorrow. Tonight. In 15 minutes. Right now. Let me go sign up. Okay, so thank you for your donation, Mr. Abstract. Just put my fries in the bag, little bro. I'm kidding, man. I appreciate the generosity, man. Seriously, hope you're having a great night, man. We will put that money towards next month's $4,000 data bill for the Rader Report. Thank you for the $5 donation. Get this guy off TikTok. Yes, get him off that TikTok. Yeah, but I don't think you guys, you know, I've always said this. I don't think you guys realize how expensive the Rader Report is to maintain. Like, probably just on this, it's $6,000 a month just to maintain. It's crazy. Wild, man. Data is expensive. I said C for cash. You feel me? Yeah. Is Nvidia pumping because CS25 they are streaming now, showing their new GPU? Nah, I don't think so. I think I mean, sure, you're getting a big run up into the 50 series, blah blah blah. But like I said, guys, news is always just the excuse to why the move actually happened. So you always get the run up into the events. You get the run ups into the different things as an anticipation move. Like, this is what we're going to talk about moving forward with the inauguration, is that if we expect downside pressure after the 10th in a sell-off into the 20th, maybe a few days before, maybe from the 10th to the 20th. But after the 10th is really where you're going to start to see potentially the market maker regain control of the markets, really start to present some of these opportunities within the options market. Right now, you're not seeing it. But, and again, that could be pushed back to February. Who knows? But as far as the inauguration trade goes, a lot of people have been trading the energy. And they've been going, well, wait a minute. You know, if Trump's going to get into office, blah, 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 then we're going to go buy stocks. You saw them kind of trade energy on the election. The Trump trade was when he got elected, guys. You saw November 5th, that huge gap up in the markets. You saw Goldman Sachs. You saw all these different names pump. But after that, they've sold off. Poof, they've gone. So the trade is actually, if you want to trade anything for the inauguration, it's 10 to 20th. However, I wouldn't really recommend trading too many things, but you want to look at the dollar sensitive names. You want to look at things that are going to become more into question as you near that inauguration. Because again, remember, the expectation of Trump being inaugurated is that the first day in office, he's going to do something with energy. He's going to do something with tariffs. He's going to do something with the dollar, right? So we have these expectations set, and it's your job as a trader. Remember, the move has already been priced in. On November 5th, the markets pumped what they needed to pump for the expectation that Trump would do something for it in the future. Now that Trump is going to be in the office, this is where you want to watch if those expectations are met or broken. If Trump goes easy on solars will absolutely rocket. Why? Because the markets sold off solars when Trump got elected in anticipation that he would be more harsh on them. If he's not, solars will go absolutely nuclear to the upside. You're seeing ENPH chop at the opening level of where Trump was elected. This is a sign, a hint that they are anticipating that perhaps solars will do well throughout the year. So maybe they're just waiting for a little bit more. 1, 2, 3 days. If it's not mentioned, poof, invest into solars. Okay, so super interesting concepts to think about, especially with banks. If Trump goes easy on big banks, then you can expect, again, maybe a little bit more follow through. But the move has already happened for the most part. The expectations have been set. Now you're just watching to see if they're met. If they are met, then you will see more upside. And if they're not met, you will see significant selling pressure in a lot of those names. Okay, does that make sense to everyone? Shorted XLE, am I cooked? No, I don't think you're cooked for this week. But I think I would avoid shorting it from the 10th to the 20th. Dreadful curtains. I don't even keep up with that. Also, do you see this? This bump on my nose? So I was sick yesterday. And this was from me sitting on my pillow like this, face down. I got an acne pimple under my skin from sitting in my own sweaty grease all night. Now, I took Accutane, so technically I'm immune to pimples. But for some reason, that one pimple under my skin is infected. So you guys are just going to have to deal with it. Quit touching it. I'm going to touch it all I want. That doesn't happen when woman is in town. Guys, can we just get a round of applause that Miss Kirsten, my wonderful girlfriend, just showed up? Can we just get a round of applause, please? Thank you. All I asked for is 10%. So, you know what's crazy is, what's your thought on pocket options, DJ? Take a bus in the opposite direction. Pocket options are an absolute scam, man. It is a, let's just say, a useless market. Pocket options are the only way to make money, yes. Pocket options, you might as well just go to an online casino. Wait. Wait. Oh my God. We saved it. I think we saved it. No way. So I just dropped the kilobytes per second. And let's see if it revives itself here. Crazy, man. Guys, I don't think it should be that bad. Oh my God, we're so back. We're so back. We're so back. You guys thought the stream would get nuked? I just completely performed the craziest surgery. That was wild. Okay, so thanks for coming back, but hope you guys $5 schmacker donation again from Mr. Great Scott. What are you guys donating for? What are you guys donating to a millionaire for? No, I'm playing. Thank you so much, Mr. Scott. Hope you are doing well. Let's check out your your big donation. Thank you so much, man. Can you check the moving range for 117 for Unity? It shows 0.79. Is there anything we can learn that is nothing burger? Okay, so Great Scott, first thing I'm going to let you know is that when you look at something like Unity, very cheap stock, 79 cents. So if we said 79 cents, we're going to go like this. Boom. Now, I assume you're, give me 1 second. I'm going to go verify this. Make sure that you're doing it for Friday. So, let me go look real quick, Mr. Scott, and then we will talk about it. So they say for Friday, the expected move is $2.2. So I'm on Thinkorswim right now, and they say for Friday they're expecting $2.2. I don't know where you got 79 cents from. Where did you get 79 cents from? So they're expecting $2.2. But here's what I would say to you, Mr. Scott. And we talk a lot about this on the Rader Report. But when it comes to expected ranges, so in case you guys don't know, you can sign up for the Rader Report for free and view my SPY chart every single week. You can compare your chart directly to mine. Woo! Look how good that is. You can get a free SPY chart. Isn't that awesome? Now, here's what I would say to you, Mr. Scott. Knowing the expected range for individual tickers is less important than the overall index or the indice. So for something like Unity, you have to just know what basket of stocks it's in. So for Unity, something like software's IGV. Okay, so go look at IGV rather than Unity itself. The expected range of Unity is less relevant. Individual expected ranges are less relevant. What's important is the overall indices, because what we do is we chart our... That's not entirely true, but let me say this. When we chart the expectations of the market, we want to know the expected ranges of the market because individual stocks more oftenly break expected ranges because they are higher beta in general. So they often do break their expected ranges, at least from the way we try to trade. Now, let me back this up. Why do I only chart the expected ranges on the indices? Because if I can get a broad expectation of the overall index or the indice or that sector, whatever, then I can kind of see which names are actually better risk to reward and could break the expected range. So for example, let's say the expected range on SPY was super tight this week, or let's say technology, something like that. So let's say SPY had a super tight expected range this week. Well, that kind of hints, okay, well, if it's tighter than usual, then maybe, just maybe, it's actually worth betting on a break of that expected range. That maybe when we do see some sort of touch of that expected range, that we do try to bet on the break of that. Okay. Now, to be ultra clear, because I know I kind of yap and go on this train of thought, here's what I always say. Scott, if you're looking at something like Unity and you find the expected range like you did, or attempt to, it was $2. I don't know where that was. For January 7th. 17th. It should be more for January 17th. For January 17th, the expected range is $3.28 for Unity. But here's what I'll say. Is when you look at a stock like Unity, finding the expected range is one thing. That just tells you where the expectations of the market have been set, right? That Unity will likely stay between those two lines with the 70% accuracy. But the only way that becomes useful is, number one, if you're trying to trade off of that, which I wouldn't, because that's not really that doesn't really have edge. But the reason I don't do it on individual stocks is to get to a chart like Unity. I need data to suggest why Unity in the first place would outperform. And I always say this to people. But when you chart, the last thing you should get to, right? If you're doing technical analysis, the last thing I get to is technical analysis. And to better show you an example of this, let me see if I can find this one image. I think it's going to be on my YouTube. So we'll go grab this real quick. I want to show you this, Scott, because I think it's super important. By the way, you guys are just so cool. Like, why do I have the best awesome supporters, man? Y'all are some really great people. Okay, just give me 1 second. Just give me 1 second. Just give me 1 second. Okay. Well over 90%. Okay, do I look older here? Be honest. Wait, why do I look skinnier? Did I gain weight?
Well over 90% of traders that set out to be profitable end up unprofitable by the end of their journey. This is common knowledge among the
why do I
trading
hear this
community,
video?
and yet among those
Okay. So this little goblin right here, okay? I show this image somewhere. I swear I do. Is it not in this video? Am I just... Okay. I've lost the bloody plot. 1 second. Just bear with me now.
Rader, my attention span is 5 seconds, and you exceeded that. I'm leaving.
Okay.
Rader.
Where did I talk about this? Was it this?
I just quadrupled my money in a trade in less than 72 hours. My name is Rader. I'm a professional.
Wow, I actually had a mustache in that video. Okay, hold on. Hold on. I need to find it. I see the chat moving in my peripheral, and I don't like that. Shh. 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 You look 11. Oh, right. That's why I don't read chat anymore. Guys, super loyal supporters. Where is that video where I explained the trading funnel? Do you guys remember that? Where is that video? What video is that? Someone explain it to me. Who here can find that video? I swear this was a video. Do you guys remember that trading funnel? Okay, I want to show... So there's a video where I talk about my trading funnel, where I show a diagram where it's a triangle. And then that triangle is your thought process for a trade. Let's see. I can't believe none of my loyal goblins have screenshotted this. I have like the most... Everyone knows where I live, apparently. But no one knows where this trading diagram is. Okay, hold on. Give me 1 second. It was the video with the Legos. I can ban him. Lesson number 2 on trading system, I believe. If you're right, I'll actually laugh. No way this guy, no way he knows. Is he a knower? Oh, I found it. Okay. All right, Scott, I hope you're still here. If you are, welcome. I found it. Okay. Boom. Okay. So when you ask, is the expected range a nothing burger? This is my answer to you. When you're coming up with a piece of data for a chart, now the charting system is the same. Typically, you just want to highlight the key levels, et cetera, et cetera. But the expected range for something like Unity might not be all that important because, well, it's less liquid than the overall indice. So sometimes it's going to be a little weird. But also, what is the relevance of that idea to somehow catching an outperforming move? It doesn't tell you whether that's going to outperform or not. It can help with your idea if you have something leading into it, though. So here's what I'm going to tell you. Every trade idea that you make has to start like this, okay? You need context first. You need an idea from a general market atmosphere. You need to know what the major themes of the market are. For example, right now we have start of the year, January. So looking at big rotations following quad witching. You have a nothing burger seasonal. You have the inauguration. You have just highlight some of the key ideas. Okay. Overall, though, I would just say general market atmosphere is the overall markets are chopping. What is that face I'm making? We are going to cover that up. Okay. So when you start with that context, now wait a minute. Oh, now the Feds are likely to pause. If they do pause, then this would do well, blah, 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 blah. Now that you have that idea, now you can go and search for names directly linked to that idea. So, for example, not too long ago, we were talking about Fed, rate cuts, war, election, inflation. These were all the key ideas. So once you have that kind of general area you're looking at, you know what's relevant, right? We're not looking at Fed cuts and going, oh, let's go long Krispy Kreme donuts. But what? What? You know, that's not related to the theme. That's not related to the current market dynamics. So context is super important, just the broad context of the market. Then you go and you narrow it down to seasonals and rotations. Okay, you know, if you have elections, things like that, what is going on? What is the seasonal trend typically around this time of year for an election year? What is the seasonal tendency for these certain sector around this time? And then also the rotations, right? Are we coming into quad witching? What is doing really well right now? What is doing really well and that fits this theme, right? So you want to narrow it down. So let's say right now we chose, let's just say inflation, or let's just say the rate cuts. Let's do the rate cut idea. Well, if the Feds cut rate and you go and you look at the names, seasonally rotating, blah, 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 IWM expected to do well. SLV, XLF, IGV, TAN, all these guys related to these major themes. So we find all these through the rotations and the seasonals. Once you do that, now and only now do you go and you look at charts in option flow / the options market. Okay. The last thing you want to end up with is a chart. You want to be guided to a chart by data that suggests outperformance or underperformance in either direction or some sort of edge. And I give this example all the time, that there are hundreds of thousands of setups that are similar to the one you're looking at right now. Let's say you pull up a chart and you're looking at this bullish setup and you're, oh, yes, I'm going to long this, okay? There are hundreds of thousands of setups that look exactly like the one you're looking at, if not better, on different time frames, different assets, across different markets, at the same time as you're looking at that one. So what about that setup is going to work? Why is it the one you're looking at is going to work? Is it because your uncle recommended it? Well, if your uncle recommended it, you better make sure you're dressed, right? No, I'm kidding. But seriously, what is the reason behind that trade? What you will find is oftentimes retail traders can't answer that question because they don't know. They'll go, oh, well, there's news. There's some sort of event going on. But that is not a justification. There's plenty of events going on. There's plenty of things going on in the market. What you need to do is charts are only validated if the idea behind them supports it. For example, price action is only bullish if the data behind that price action supports it. For example, if you're looking at something like banks right now and it's going up, something like banks would likely be justified. Why? Well, maybe you have an option flow and blah, blah, blah. There's a huge put order on it, hedge order, whatever. So you need to have that data to say, why is the bank's price action actually valid? Why is this big candle green actually valid? Because the next day, you could rug pull. If there is no valid data behind that trade, it doesn't have to keep going up. It doesn't want to keep going up necessarily. So what you see is a lot of people get sucked into this idea of technicals, but they struggle to distinguish other ideas from it or to justify why that one is the best one because they don't know the funnel. They didn't have a path to that chart. Okay? Hopefully this is making sense. Uncle Joke. This is how I ruined my career, man. So what I want you to get at is that when you're making these decisions, for example, the expected range, to get to the unity chart and to find value in something like an expected range, it would have to go like this. Well, let's say right now, let's go along with that leader, that the leaders of 2024 are going to continue to get a bullish rotation. Okay, so the current situation is it's a new year. We expect a new president, admin coming in. Also, you also have just in general a new year start, which typically brings a lot of money into different places because money managers start repositioning for Q1, Q2, and that brings new positions versus last year's Q2, 3, 4. Okay. So with that theme, you want to go look at the seasonals and the rotations. Right now, the rotations favor the outperformers of 2024. Okay, so that would be names like software. Software was a huge outperformer of 2024. Okay, so now we're getting to the chart. Now we go look within softwares and we find the leaders of software, the ones that have data to support why those ones would be better than the other ones. Okay, so look within IGV, you'll find names like Unity, Adobe, CrowdStrike. You'll find all these other different names. You go through and you look at all those charts. And you go look at the option flow. You go look at the options chain. You look at if they have any seasonals, major seasonals of any of them. Does any of them have earnings coming up? If so, within 2-3 weeks of that earnings, you could possibly play an earnings run-up where you typically get a bullish rise into earnings because participation into that earnings increases. So that's how you get to unity. And when you get to unity and you look at that chart and maybe you look at the expected range and go, it's close to the high, but unity isn't pricing in a new high. But my idea here, the data that I found up to this unity chart is suggesting that it is going to break that high. So now the expected range adds edge to your trade because the expected range was too tight and that you have data to suggest otherwise of why it would break that expected range. Hopefully this makes sense to you, Scott. So you're saying forget Unity and subscribe to the Rader Report. Yes. Thank you so much, Scott. I appreciate it, man. Yeah, but hopefully all of that makes sense. What I'm trying to get to you guys is this, that you need to look at this funnel when you come to an idea. The only way that a price chart that looks like this is valid, right? People would look at this and go, oh, look, that's strength. That's strength. Look, that's strength. And then they hold and they see it get rug pulled. Why is it that this chart right now is better than all the other ones? So for me right now, I would say to Unity, this isn't a bad trade. This is a recent, this is a software name. It's been in a big accumulation for quite a few years now. This is pretty good. Is it the right time to buy on a shorter term? Is it going to be a week, a month, 2 months? Who knows? But I would say overall, this one is a lot stronger than a lot of other software names. But when you look at software in general, right, is it worth longing Unity at least this week or next week, or is it worth Crowd? Is it worth Adobe, right? Probably not Adobe, since this is such a big lagger of 2024. But these kind of ideas are really what you want to look at, okay? And again, price action is only validated or invalidated if the ideas leading into that price action chart or the data underneath of that price action chart says so. And I can't stress this enough that so many people look at charts, but they forget charts are a result of underlying data. Charts are a result of data outside of the charts. What? Charts are a result of data outside of the charts. So the only way you're going to get benefit from these charts, technical analysis is very important. I can't stress that enough. But what I will say is that the only way you can really find that edge in technical analysis is understanding what behind that price action right now would drive it higher. What would make it go higher? Is it a hedge flow option order? Is it a seasonal? Is it a rotation? Is it a greater underlying idea? And this kind of goes back to that Michael Burry is a washed up trader, let's be honest. But when he made that shorting on housing, right? He read through all those reports, all that stuff. He had data underneath the charts that said that price action in the housing market was not valid, was not real. All the bulls, now this was on a much grander scale, but all the bulls were just price action trading. Oh, let's go long the houses. Let's go long real estate. Look how good all this stuff is. But the underlying data is what caused it to crash. Prices were a result of that underlying data coming out and things like that. So that's on a much bigger, grander scale, but on a micro scale, that's what you want to think about. So hopefully that makes sense. I am a subscriber. It was a joke, everyone. Okay, so hopefully you guys are Rader wearing Razor. Mods, can we please ban Captain Jack Sparrow from the chat, please? No, I'm kidding. I'm broke, Unity it is. Chant with me. Charts are a result of data outside the chart. Okay, so go back to the brig. No, but yeah, it's a concept that I want you guys to understand. One day you will understand that options are the underlying. When you look at the shares market, the options are really what control it. Options are a picture of the shares market, and it's a more accurate representation of it. One day you'll understand that, but we can get into that another night. Serious question. When do we go from market-driven versus market maker price action? Friday looks like MM's lost their grip. I don't know. So certainly right now, it's still not in the hands of the market maker. Again, with decreased options activity and decreased volatility, you're not getting huge, clear moves based off the options. You're just not getting them right now. It's non-directional. There has been no trend set in the market yet, and you likely won't see one until after this Friday and into the expiration, the 20th. And if you guys want to time this up, remember what you can do is, since this is a monthly expiration, what you can do is you can go to SPY and you can say, if the monthly expiration is on the 20th, why is it only showing the 21st? Oh, it's not. It's on the 17th. What am I saying? Okay. If the options expiration is on the 17th, right? Then what you can do is you can do the 14 days before, 12 to 14 days before is going to be your shakeout phase. And then 2 to 3 days before is going to be your max pain. So I would say right about here is when you can expect your shakeout phase. Okay? So if you had to ask me, the odds of this going down is kind of increasing in my eyes, right? The shakeout phase. Boom. up. You might get one more high, but overall you expect some sort of reversal, a shakeout, right? And then 2 to 3 days before the expiration, you can expect that selling pressure to come in. So how much higher does this go up? Who knows? Maybe this continues to drive higher. But I would say overall, you definitely will see a change in dynamics moving forward. You will likely see some sort of pickup after the 10th and see this move. So if you had to time it, I would wait to take bigger position sizes after the 10th. We talked about this in the report, that this is not a time to swing hard. You have to just relax. So overall with the charts, the fact you came up to the expected range already, it hasn't broken it yet, but I would just say, again, this is just not a market to make big bets. I can't say this enough. It is really not. Like even my lunar, my OKLO, I trimmed most of mine last week. I'm still holding runners for January 17th, but being up 700%, it's beneficial to hold it. I can hold it stomach a lot more than other trades right now. So this is more beneficial to me than trying to, force longs at something like Boeing all day long or, stuff like that. So you really just want to be a trend trader. You just want to see strength. You trade like a literal monkey, like see strength, play strength, see weakness, play weakness. You almost have to play like an elementary level thinking to capture a lot of these ideas. Literally just leaders. If it's leading, great. Long it. That's what I've been doing with the banks, right? Citadel today, one of the top performers. Just see strength, long it, right? So that's that. But that's that. So do you guys have any other questions? It is getting late. I don't want to keep you guys too much longer, but please, please, please do drop your questions down below. Drop your questions in chat. This is your time to drop your questions. Thinking to Citigroup or Citadel? I always say Citadel, man. Great. Long it. That's what I've been doing with the banks. Why do I always say that? Citadel today. One of the top performers. Do they just see strength, long it, right? Let's go see their website. But that's so do you guys have any other questions? It is getting late. I don't want to keep you guys too much longer. But please, please, please do drop your questions down below. Drop your questions in chat. This is your time. Do they still have Drop your questions. They had a huge research department not too long ago. Speaking of Citadel. I always say Citadel. Yeah, I know. I don't know why I always confuse the two. But yeah, Citadel, they do market making and they provide a lot of liquidity. Let's go see their website. I remember not too long ago, they had a ton of research that you could get on the internet, and then they just like deleted it all. Do they still have so kudos to them. They must have been coming a little less profitable, eh? Research department not too long ago. Speaking of wild. Yeah, I know. I don't know why I always confuse the two. But yeah, Citadel, they do market making. Okay, let's see. Why do people buy puts way in the money on Nike for January 17th? So whenever you see a put that's within, like super in the money, don't touch it. Don't think about it. It is not valuable. Any options trade that is outside of the expected range is useless. So, okay? Because 90% of the time, what it is either a rebalancing trade, a hedge of some sort to counteract something else. It is useless. Okay, so whenever you see a super deep in the money call, okay, let's see. Why do people buy really it's a position based off of shares and not so much the options. Because when you buy super deep in the money, if you guys look at Nancy Pelosi gets a lot of scrutiny for her Nvidia trade. But are you guys stupid? She bought Nvidia. She disclosed her trade, and the only reason everyone's so mad is because they didn't buy with her. But also, her trade was actually extremely stupid. She bought 500 strikes in the money. Okay, so whenever you see a super deep in the money call, okay, let's see. Why do it's okay? Really, it's a position based off of shares. When everyone was like, oh, Nancy Pelosi made 75%. If you guys look at Nancy Pelosi,
Nancy Pelosi gets a lot of
My
support
calls were
on
up
Nvidia trade.
2,000%.
Are you guys
Okay.
stupid?
So
bought
she didn't make
Nvidia.
that much off of
She
it.
disclosed her trade,
But
and the
she
only
bought
reason
so much in
everyone's
the
so
money
mad is
because there was
they
some
didn't buy
other,
with her.
you know,
But
share
also,
position
her
with it
trade
to,
was actually
to balance some
extremely
delta.
stupid.
You know, she's had advisors
She
that
bought
told her to do
500
that. It wasn't
strikes
her
in the money.
making the calls on 500 strikes in the money. She has financial advisors that probably tell her, manage her money for her and what to buy, et cetera, et cetera.
When
Okay.
everyone was like, Nancy Pelosi
Yeah,
made
Nancy Pelosi literally could have just
75%.
bought shares. Okay, but I mean, she made 75%, so she obviously made more than the other line. But
2,000%.
So she didn't make that much off. Politicians are insider trades. Listen, I don't disagree. I think there are a lot of politicians that don't do it fairly. But I will say that when it comes to like, oh, should they trade? Should they not trade? I don't really care. But like saying that it's not fair when they disclose their trades. Yeah, Nancy Pelosi literally. If it's not fair, why don't you follow along? It's because not a lot of people actually have the guts to do that. And what you'd also find is if you actually just invested in SPY, you would outperform majority of the senators. Insider trades. Listen, I don't disagree. Like majority of the senators underperform the market. And in fact, like 3 years ago, Nancy Pelosi was the worst performing senator out of any of them. Or congressman, whatever. So to that, I would say, yes, there is absolutely some weird. But you also have to understand, like people say, how is Nancy Pelosi worth 200, 300 million? Her husband is a hedge fund manager. Actually have the guts. Where do you think she got the money? Also, when you're a politician, you just get a lot of money from fundraising and networking, and people pay you to speak at places. You know, it's power. You know, that's sadly how government works. It's how it's always worked for thousands of years. You know, you become an emperor, you become rich. That's how it works. Or congressman, whatever. But yeah. Yeah, her husband's off the trolleys now, but we'll he's boozing and cruising, I'm sure right now. But anyway, guys, that's how it is. And look, what I would say is that if you actually go and look at a lot of their trades, they're not that intelligent. Like I think retail just gets mad because they trade stupidly. Like they're looking at penny stocks while these senators are looking at stable, genuine companies. And I would also say, keep your, you know, you always have to be neutral on these topics. But I would say that you have to keep your mind open, because if politicians, what would you rather have? A politician that is not invested in the country that they are governing over? Or would you rather have a politician that is invested and does have skin in the game? That's a hard debate. Okay, put politics for aside. That's a tough question. Because would it help that a politician has nothing to lose if they're making decisions? Or would it help that the politician does have something to lose by making bad policy? Do you see the twist there? So which is actually better? I don't know. What would you rather have? A politician that so that's what you really have to consider. And I always tell this, you have to be neutral on these topics. You can't be politically brain rot persuaded to want to. You really have to think about it. You have to be logical, because like I said, you know, that which is better? Them with something to lose or them with not something to lose? I don't know about you, but it kind of scares me to think about politicians with nothing to lose. If anything, from their ego, right? So do you see the twist there? Oh, his Porsche actually crashed through a fence owned by Baron von Felipe de Rothschild. No joke. So that's why do I recognize that? I always tell this: you have to be neutral. Is that a racer? You can't be politically brain rot or a king. You really have to think about it. You have to be logical, because banking family. Oh yeah, he's a racer. I was like, wait, yeah. Them with something to lose or them with not something to lose? I don't know about you, but it kind of scares me to think about politicians with nothing to lose. If anything, from their ego, right? So, okay, guys. Without further ado, I am going to end it here. But what I will say to you guys is this: if you guys do want to sign up for the Rader Report, guess what? We are hosting a 14-day free trial for only new members. If you're already a member, sorry, you can't sign up with this. But if you've never subscribed before, you get a 14-day free trial. You literally have no reason not to sign up. You have 14 days free. You can cancel anytime before then, and you won't be charged. 14 days free. Wow. Free. Free. What do you get? Okay, cool. Well, what do you get? You get a bunch of the tools. So you get the market overview tool. All these tools are hand-built by me. So I've built every single one of these tools to accompany, like to fit my style of trading and how I can, pass that on to you guys. Of course, the call put, things like that. But also we have the gamma levels, etc., okay? We also have the seasonal tool. This is super important. And then we also have, I'm not going to show you the link, but we also have the chart link where you can actually copy my trading view charts directly onto yours every single week so that you get to see the levels exactly on your charts. Super cool feature. I'm glad they added that. But other than that, you also do get the monthly reports. So every single month I drop a report over longer term trades, things like that, the outlook for the next month. And then also the weekly reports every single Sunday. These are pretty juicy. But again, this is just professional research. If you guys actually want professional takes on the market, professional ideas, and I say professional because I was taught by professionals, all the stuff I'm showing you today about the options, about, these kind of perspectives, you don't really get this anywhere. And I recognize that. I'm very lucky to know what I know at my age. But you will get a very complete report every single week. Blood, sweat, and tears every single weekend to find ideas, to keep up with the markets. This is literally my game plan. Every single time I'm posting one of these reports, it's just a window into my perspective. That's all it is. And of course, you can go back in time as well and archive. I've been doing this over a year now. It doesn't show every single one, but it also shows the previous reports, so you can learn from a lot of the different trades, see the entries, see how they worked out, see the ideas before them. And since I'm always posting these before I take them, they're always front-running ideas, so you can learn from not hindsight, but actually learn from how I was thinking in that moment. So hopefully that's important. I think it is. Maybe you guys can do something with that. I'm posting one of these reports. Mining Bitcoin or something? Yeah, I am. But that's that. But you also do get the seasonal expectations. Huge part of this. I'm always adding stuff to the Rader Report. There's going to be new tools, new features, but I always give the seasonal data, the probability encounter. January is kind of a no-show, but yeah, probability counter with daily probability closes, etc., etc. So super juicy stuff. Hope you guys sign up for that. By you guys signing up for the Rader Report, you're directly funding your own kind of trading platform. Since again, I built all of this for you guys and for myself to make things more efficient for how I trade. So you're really getting a window into a trader's world. So other than that, guys, have a great rest of your night. Thank you for all the donations, Scott, Abstract. You guys are awesome. Thank you so much. Even though it's $5, look, the gesture means so much to me. It really does. You guys are awesome. Even typing in your credit card, all that. I appreciate that, man. That's really cool that people out there in the world are willing to support me like that and to contribute to something bigger than themselves and myself. So thank you so much, guys. I truly do appreciate that. Other than that, guys, have a great rest of your night. Bye-bye. Make things more efficient for how I trade.